In this video, we are going to break down some of my gold trades that I've done over the last week that I have posted on my Twitter feed. Okay, so let me just walk you through the actual trade journals first, and then I'll break it down. All of my trades are posted on Twitter at Forex Recipes. Okay, you can see it down the screen. So I did a long in gold yesterday, so we'll talk about that. That was a nice 150 pip plus move. And then here I indicated that this downtrend in gold was fake. Now this is something that is not going to be easy to identify unless you have a lot of hours of chart analysis and watching the markets behind you, right? So this comes with experience. And so you can see that downtrend, which was fake, was completely smashed. Okay, so we might talk about that as well. And this was my initial short on the gold that I will also talk about. Okay, so in today's video, I want to go through the short trade that I did earlier in the week and the long that I did, okay, also earlier in the week. So I basically shorted gold from the highs at that point in time down to a level that I wanted to actually buy from. Okay, so we'll talk about both of those setups and entries and why I was looking for shorts and why I was looking for longs at the end of that short. Okay. All right, so let's jump over to the charts. Now I'm going to try and make this as simplified as I can. There's a lot of detail that I won't mention just to keep this video somewhat simplified. So we're looking here at a daily chart. Okay, now I have done a lot of videos on your daily bias identification, and you need to have a narrative. Okay, so that's important. You do need to have a directional bias, and then you need to trade and forecast future price movement in that direction. So here we can clearly see we are going up. Each one of these down candles is institutional sponsorship. That's where the institutions are getting into their positions in line with the high time frame directional bias. Okay, so directional bias on gold, as mentioned in my previous videos, go and have a look, was bullish, and I do still feel that we're bullish until we take out liquidity, which is what I believe the market is reaching for up at these highs. Okay, so if there's any confusion around how to obtain directional bias, we'll go and watch some of the previous videos that I have taught on this channel with regards to identifying directional bias. So let's now drop down into an hourly time frame. Okay, so looking at this day, right, let's actually just add a line here. So we're down here somewhere. This is obviously now the day has traded, but prior to that, down here on that day, or even on the day before, the immediate target was the high of the pivot here. Okay, so that was the immediate draw on liquidity, which we've now taken out, but we are identifying that to be our draw down here. Okay, so let me now drop down to an hourly chart, and I want to walk through a couple of things. Okay, so this here is Wednesday. Okay, so Monday, Tuesday, Wednesday, we've been rising, right? So all week we've been rising. Okay, typically in the market, when you get 3 days of rise, you do kind of see some level of retracement, if not a complete reversal back to the low of the week. Now, because we were bullish already on gold, it was not, I wasn't thinking that we were reversing to get back to the low of the week, but I was expecting a level of retracement for a number of reasons. One, because we've been long for 3 days and there needs to be a bit of retracement. Secondly, the market needs to, so here's Wednesday, the market needs to come back to a level where institutions want to get back into the market, okay? And so on the hourly chart on Wednesday, I could start to see that we are now at the high of the week, okay? And I see this engulfment on an hourly chart. And what I essentially see is that we have a market that now may be showing signs of a retracement, okay? Essentially, it's not the short that I'm looking for, it's actually the long that I am looking for because I am directionally bullish, okay? So what I'm looking for is where is a down candle where institutions have sponsored this move up, and you can clearly see there's this one on the chart, okay? So that is where I was looking for to get into my long. So I'm going to just draw a horizontal line there at the open of that down candle. And timing is important now, okay? So I'm looking at that, and I'm up here, and I'm thinking, okay, that's kind of where the institutions previously bought, if that made this move higher. Now, why that down candle? Because you can see, number one, it's quite a large down candle, so it takes a lot of funding to initiate that kind of a movement in the gold market. Number two, that's the most energetic movement from that down candle that we see up, right? So that's kind of where my eye's drawing to. Now, when I see this engulfment and this second down candle move down, okay, and then we come back up to that high bull candle, let me just put a box around there, and we reject, right? So that pattern right there is a rejection. And when I see that inside of London, okay, that's inside of London at 1 a.m, and we're at the high of the week, and we're seeing this engulfment of a 1 hour up candle starting to move down, that to me indicates that we may now be having some retracement. Okay, now on a shorter time frame, like 15 minute, 5 minute, that'll be a lot clearer to identify. But that's where I went short. And I was always going to exit my position when we got down to this level because that's where I want to buy from. And I was watching time. So that came in at Thursday, 9 a.m. And on a short time frame, like 15 minutes, you could see that was actually 9:30 a.m., which is a key level for when gold trades in the direction of the high time frame. Okay, so my initial short was just from that level there down to that level of interest for me at 9:30, and that's where I exited the short on gold. And that was, I think, around about 100 pips. So if we go back to the Twitter where I journaled that, you can see it down here. Let me just open it up. that we had that reversal. You can see that's what I saw on the lower time frame 50-minute chart. We started to see a price displacement from the high of the week, okay, and then back up into those up candles. So that's what you can see, and that is a very clear retracement or short setup entry, okay. Now I want you to notice here that how this market trades down. Each down move has a preceding sequence of up candles that the market comes back into. So we started from here, we went down, back up to where institutions are shorting that market for the interim, down, back up to those up candles, down, back up to this up candle, okay, and down, back up to these up candles. So this is a bearish order flow that's clearly visible, and I shorted from that level there. Now, I was always going to get out at 9:30, okay, because I knew 9:30 I am already directionally bullish. Whether or not I take the long from there is irrelevant, but at that point, I want to be out of shorts, okay, and that is where on the left-hand side is the 1 hour institutional level that previous institutions had bought from, okay. The industry calls that order blocks, okay, but just to keep the terminology so that everybody can understand it, I'm just letting you know that's what I refer to as institutional sponsorship, where institutions are getting in on that move, okay. So we're coming back to that level, allowing institutions to buy more. Again, the institutions are trading in the directional bias of the higher time frame. So at 9:30 a.m. I closed out this short, okay. So back to the chart, that is then when at 9:30 a.m. I was looking at longs, okay. So that's the level that I took another entry to go long. Now, if I jump down to a 50-minute chart, and I just go to that price action, I'm trying to open the chart up, this is what I was looking at, okay? And this is where, I'll just take this off, I posted on Twitter that this move down is potentially a fake trend line, okay? And I'll recognize that as a fake trend line because, number one, I know that we are directionally bullish in a high time frame. Number two, we've had significant interest by institutions at this level, okay? And if you look at this move, this is zigzag, okay? This is the market makers manipulating retail traders into thinking this is a move down, and each one of these highs is a resistance level, and that is where retail traders place their stops, okay? On the way up, which is exactly what I was expecting, those stops set by retail traders are what's going to fuel the move up, okay? And in my private community, I was commenting to members that this is going to be a massive spike up in gold just because of the way this is coming down, okay? And the key level was here, 9:30. You can see that there is consolidation at that 9:30, okay? And now you can see from that level, if I go back to the hourly chart, actually let me go back to the 15 minutes. So my trade was simply from entry at that 9:30 level, that low that I was confident was formed, okay? And my target was simply back up to these highs. So for me, that was my trade, back up to these highs, because they were just so smooth. Look at the highs. Oh, that's a triple top. Again, the market makers are manipulating, and this is engineered to be a triple top to get more people short this market, okay? And I did take that short, but with a very tight plan in that I was expecting the market to come back down to a level where I wanted to buy from, okay, which was a clear institutional level on the 1 hour chart. Directionally, I was bullish on gold, and this was expected to be a retracement, and my plan was always to exit at that level, okay? Regardless of what I was seeing on the chart, I was not going to keep that short on past that point, and 9:30 was key. We were down there at 9:30, and that was for me another clue that I need to get out of the short position, because 9:30 is a key turning point for where institutions are getting in, and they will trade in line with the higher time frame directional bias, okay? So that's why I exited my short there, and I also entered my long position there because I was already interested in going long the market based on a higher time frame directional bias, and I just was waiting for the right level in price and the right time, okay? So then you can see the market just off. My target was hit, okay? That for me was the trade, and that was from that 2380 up to that 2400, okay? Now the market obviously continued moving up, so we had a push through those highs, pull back, and then continuation. I did not trade that, okay? And that was up to the higher time frame objective, which we can see in the daily chart, we have now met, okay? So I think we will get another retracement in gold, maybe down here. I've already got this level mark around that 2400. That's not too far from where we are, okay? We might get a deeper retracement down to 2390, maybe even a deeper retracement to rebalance some of this market. So we've taken out this liquidity. Now I am expecting a retracement, okay? And so we'll need to kind of assess the market on the day next week, exactly where we get that retracement. There is some imbalance here that I do feel we need to perhaps come back down into and rebalance, okay? Or we might just simply retrace back down to these down candles. But ultimately, I do believe that the market will reach for this high that was created in April, okay, at 2430. So we'll see how the market goes. I hope that was useful, but they were my reasonings for first shorting this market from the high of the week down to this level, okay, exiting there, and then for taking that long position and taking that exit there. Let's look at that long on the Twitter journal. So that was here, okay. So that's that initial down move, okay, where we come back down. That's the New York session. That's the 9:30, okay. You can see that from there, the market has not gone below, okay. So you can see my levels there. The longs were all at that level, 23.80, okay. So that's 23.77, that's 23.80. So I was taking longs in that level there, okay, accumulating positions for a move up to here. Okay, and that was where the exit was, around that 23.95, 2400, above this level here. Okay, so that's a nice 100 pip move. These boxes on my chart are 100 pips. Okay, so a nice 150 pip move, right? So this here is 50s. Okay, so entry down here and exit up here. Okay, so go back and study the charts. Okay, you need to study the videos that I've done that help you identify higher time frame narrative and directional bias. Okay, and you need to then look at all the different videos that study the charts and what I'm pointing out here on the hourly chart and the 50-minute chart. Okay, it comes with practice and study, right? That's how you will learn. So you need to study how we can use current and historical price action to forecast future price action. And so you can't get better than that, folks, right? So I shorted the market from the highs down to the lows, and then I recognize that that's a long setup, and then long the market from the lows to the highs. That is precision. I don't have to get the exact low and the exact high. That's all I need. Even this down move is all I need. But it's the expertise, it's understanding price action to be able to take advantages of these key turning points. And you can see this knowledge is incredibly lucrative. Okay, so I hope that the video was useful. I will now talk with you in a future video.